From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 20th, 2017. In a moment, we'll be taking a look at the USDCHF, US dollar versus the Swiss franc for today's trade analysis. But first, I want to recap one of the trade suggestions made yesterday. Starting here on the USDCAD, the dollar Canadian, we were looking for a buy on a dip into the support zone. That is the green shaded area at the very bottom of the chart. 1.3230, 1.3210. We were looking for a long scenario because we have found a lot of support here. 1, 2, 3, 4, 5, 6 days now, finding support into that green shaded area. The first target, of course, for that buy was the 3270, 3290 level, the yellow shaded area. If we zoom out just a little bit here, you look back to the left-hand side of the chart, and you can see this has also been historical support. Right back here where the black circle is, where the market found support, and that began the complete reversal for the pair all the way back up into the 37s. Now, we don't know if that'll be the point of reversal to go that far, but we do know that this is a significant support. So yesterday's buy was into that level. If we can break through the 3290 level, the top of the yellow shaded area, back into 3315, 3330, the orange zone, or possibly even as high as the 100 period moving average, that sits up here into the upper 33s towards 133.85, and also coming closer towards the longer term trend line there if it pushes into the upper 133. So we do have some upside targets. We can see historically that's accurate as well. The main focus right now, though, is protecting profit on the long from the green zone from yesterday's trade on the US CAD. Moving over to the USDCHF, it's kind of a similar situation where we're looking at a support zone, a significant support zone, where we're looking at support again for the day today and the possibility of this turning back higher again. We see the long-term downtrend. It's been in a downtrend for quite a long period of time, but we're starting to see clues and evidence of potential reversal down here at the bottom. Let's zoom it in one time. The first clue is the support on the left. We can see the yellow shaded area, the black circle, support here into the black circle. The market 1, 2, 3, 4, 5, 6, 7, 8 days sat support above the yellow zone before finally breaking down. So 8 days of support there. Broke down, made a new low. So interesting here, we have a lower low. Black circle, black box into the pink zone, 96.30, 96.10, found a second support. And then it started working its way back higher, and now we're finding support above the yellow zone again. Again, that is the same yellow zone that we found support in the black circle on the left-hand side. So again, we're looking at a duplication of support. So what that tells us is that there's a potential that we could see a rally, just like back here, to the green shaded area. So support at the yellow zone, potential rally to the green zone, only because that's what happened back here. The only risk in this scenario is that the US dollar starts to sell off again, and we'll see it push back underneath 9,700. So right now, as long as it stays above it, just like yesterday and the day before, we're looking for buys on dips into 9,730, targeting 9,775, 9,800, the green zone, and of course a break there goes much higher. Interesting here, if we just take a look at the left side and the middle, we're looking at a potential head and shoulders, inverted head and shoulders pattern. Shoulder here, head here. Now we're looking at the right shoulder. If that becomes a point of support and a break of the green zone, we could look for a much more significant reversal here for the dollar franc. One last thing, Fibonacci from the highest high down to the lowest low of this range puts the 236 right at 97.28. Guess what? That's the top of our yellow shaded area, and we have broken that. 382, 97, or yeah, 0.9799, right at 9800. That's why I hesitated. Top of the green zone, 50%. Purple zone. So we have some significant retracement points if the market finds support here and goes back up. All in all, the risk is likely underneath yesterday's low, which happens to be right around 96.95. So 96.90, 96.85 would be a decent stop loss if you decide to dive into this trade from the yellow shaded area. 4-hour time frame won't change it much. We'll see just a little bit of a zoomed in view to that same level there into the yellow shaded area. There it is, testing it a second time. We saw it test it here, bounced up. Now we're testing it again. So again, buying as close as possible to 97.30. I've already set up a pending trade there, so if it touches one more time into 97.30, I'll be long on the dollar franc, targeting the green zone or higher for the USDCHF.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.